Good day, traders. The 4-step method to high performance trading and the free audio program, the 7-step daily routine for high performance traders, are both free downloads to help you develop the skill set, the mindset, the discipline to master the markets. The link is down below in the box, the description box. They're both free downloads. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. Today we're going to be talking about the day count and the basic 3-push pattern pump and dump. And the reversal obviously is the dump and pump. We talked about this last week in our Monday to Friday daily cycle video, and a lot of traders, I guess, still not completely grasping that concept, front side, back side. We'll go over that today. We'll go and look at some charts and review some examples, and then I'll encourage you to go through your charts. And if you master this, the session trades and the weekly high-low 3-level trades, high-low of the week trades, will make sense to you. Crystal clear for your sessions, and then also identifying, depending on the session that you're trading, the instruments that may best move in the sessions that you're trading, looking at the day count for the best trading setups. So coming back to number one thing that I look at each and every week, Mondays is the start of our week, regardless of what the chart looks like or anything else. Monday sets the high and low. And there's only 3 things that markets do. They trend, they false break reversal, or they're in a trading range. So if you're going to be trading on Monday, there are some key things that you can be looking at on a Monday. Again, depending on the session that you're looking at, and we'll look at some specific examples of Monday and how to look at Monday in the session that you're trading. And then we'll look at how that affects the rest of the week, looking for the basic 3-push pattern, pump and dump. Now, I want to reinforce this is what I do. This is what I look for, and this is how I identify the best trades in the sessions that I'm going to be trading, mainly the US. But I'm going to show you what a best trade setup looks like in each one of the sessions and how, again, you can identify those. So if Monday is our first day of the week, now just forget everything for a moment about the rest of what's on the left of the chart, and let's just look at Monday itself. Let's say Monday makes a high and makes a low. Monday makes our initial high-low. We'll call that day 1. Now, the same applies for the downside. We're going to look at examples. I just want you to grasp the concept. Day 2, we may have a couple of scenarios. We could have a day 2 that comes back inside, as we talked about, and gives a 3-peak pattern. And on day 3, breaks out. So that is the first day of a breakout trader. First day of breakout traders. If we're looking for a pump and dump, where is the pump? The pump is on the upside. So we could have a day 3, which is our Wednesday. We might have a short trade on day 3. The trade, even in Asia, going long may have been okay, but it may not have been enough range that even though this pullback, it's come back. But we could have a close down and a day 4 Asia trade that goes back up to the high of the week. And that's our second push to the high of the week. Our second push of breakout traders at the high of the week. We could have a day 5 that tries to get up there and doesn't get there and rolls over to the low of the week. So day 1 sets the high and the low. We get a 1 push, a 2 push, and a 3rd push that fails on day 5. So important that if we just go back to some simple things, we can get all kinds of scenarios. We can get a day 2 that puts in a peak formation, a day 3, and a day 4 that rolls over again. So if you understand where you're at in this template, again, 1 push, 2 push, a 3rd push that fails, we can get 1 push, 2 push, 3 pushes that fails. The pushes are on the upside. So if you understand that and you're shorting on day 1 of the breakout, you may not go anywhere. It might. It might come back on day 2. It might come down on day 2 and day 3 to the low of the week and come back the other way. Day 1, day 2, day 3. The pump is on the downside. 1 push, 2 pushes, and a third push reversal. So it might come down and fall into the session. 1 push, 2 pushes, come back, and a third push, and come back in day 5. I don't know. I don't know what they're going to do. When I come to the screen, they could be here on Monday. I have no idea what they're going to do. The basic pattern, though, is 1 push, 2 push, 3 push, reversal. So there are session trades maybe on day 2. This is day 2 after we've broken the initial high-low. So we don't know. The important thing is after Monday prints, we have a high and low. We don't know which way they're going to break or extend the range. We have no idea. You think you might, but you'll be surprised how many times they come back down without breaking the high of the week. We have traders buying the close, and right away they're underwater. They might come down for 3 days, reverse on the Fed or something. I have no idea. But once they start the pump, that's what I'm looking for. The pump, we could have a break in structure and a pump on day 4 that closes as a first red day, and we get 3 little peaks and a huge move down on day 5. So if you understand where you're at in the day count, there will be certain session trades that are maybe on day 2. It's a better, as I've mentioned before, if you're shorting the first side of a breakout, that may be a strong breakout. This could keep trending. If you're shorting the second day of a breakout, you might have a stronger possibility of a better short trade. You might be better going long in Asia. On this particular day, you might be better going long in London. And on this particular day, you might be better shorting into the US Open for a large measured move that's going to take out the low of the week. There are different variations, but Monday sets the high and the low. You could have a breakout trade on a Monday from a previous day's high. And that will, again, ask the question is who's in the market? We have longs in the market, maybe at a break of Friday's high. They might come down or even go up on day 2, trigger breakout traders, and come back down into the breakout longs and go all the way back down, take out Friday's low, and come back up and back down on Friday again. So we come back up and get the traders who shorted the short trade on the way down, come back and get those traders, and then roll it over. We could have a market that gives us our first red day. Traders look for the short trade on the first red day, and right away they start going back up, and they take off back to the high of the week. This could be a first red day trap. The ideal first red day is going to be when we get our 1 push, 2 pushes, break in structure, maybe a vertical move, and we can get a first red day trade on a Monday even. So we trap the volume up top heading into Friday's close. Monday subtly wakes up and rolls over and goes vertical through the low of the week. There are different scenarios. But if you can master and understand each week, we may have volume trapped already on a Friday at the low that reverses into the close. That gives us a thesis heading into Monday's session, maybe not so much in Asia, but maybe in London, because we know there are stops above maybe Thursday's high where short traders triggered the break of Thursday's low. Their stop is now up Friday's high. Monday goes back up to hit stops, puts in a peak formation, breaks down, maybe puts in a low on Wednesday and starts to run back up. There are multiple of options. The pump and dump, the basic pump and dump model is when we get 3 pushes. We can get 3 pushes. We can get 3 pushes. And sometimes this will coincide with the news candle. So if I'm on the front side, just to clarify, front side is if we break the high, we have longs in the market and we're going higher again on day 2, we are on the front side of a move. What that means is that if I'm shorting into the front side, my downside may be there, but it may be limited. Maybe the best trade is in Asia or London going long. So we could have a market that breaks out on day 2, breaks the high of Monday on day 2, comes into the close. Asia puts a low in place. London triggers the low and then takes out the high of the week. Shorts back into the close in the US. They break structure, come back up one more time. We're on the front side as long as we're making new highs. But if they break that and pull back, we're on the back side now. So I may have a more successful short trade on the backside once they've broken the 3 pushes. Doesn't mean that backside trade's going to work. We could still have one more visit before rolling over. But my odds of success when I'm counter trending may be better on the backside of the move. Right? Break in structure, retest, and the short trade. We may be the same thing on the downside. We could be 1 push, 2 push, 3 pushes. I may have a better reversal trade on day 3. Day 2, odds increase significantly. If I'm on day 1, coming back to, I talk about don't counter trend the day 1 runner. So if Monday's setting the range and it's going to keep going and you're trying to counter trend this, get stopped out, get stopped out, get stopped out. But you're still in the initial phase of first day runner. They break it the second day. Now we've got longs in the market. That's the beginning of our pump. We could have an inside bar again on Thursday or a Wednesday. They trigger the high of the inside bar, break down, roll over into the US for a large move down. So a lot of people have asked about the inside bar. The count does not change. The count does not change. It could happen on day 2. You could have an inside bar anywhere. Understand that they can use that to trap traders on the wrong side. And then the obvious trade is going to be, once that breaks down and sets up, the obvious trade is the measured move all the way back to the other side, especially if the inside bar traders are trapped. Now, the difference is you could be on a week 3 weeks of rise. And if traders, you're going to need to do some homework and go back through your charts. You could be on the 3rd week of rise and we could get a day 1, a day 2, and an inside bar on a day 3. And that could be the beginning of a very large move on the break of the inside bar out of a consolidation on a 3rd week, a 3rd level of rise for a very, very, very large move, especially if it's heading into a weekend, and we'll often see those close into the end of the session right at the extreme. So important to know where you're at in the month, because we've talked about the monthly rollover, but also in the day count. Monday sets the high and low. As soon as they violate one side, we could have a false break. We could have the beginning of a 3-push pattern. So I've had traders ask, well, why didn't it collapse on Wednesday? Maybe we are still on the front side of that move. It could be for a long trade or for a short trade. So if you're on the front side still and you can identify those opportunities and you're inside of the peak formations, you may still have a great opportunity in London for a trend trade. If you're looking to counter trend at the high or low of the day and you're still on the front side, your odds of success will increase the more pushes that take place. If you're still early in that 3-push pattern, you may still find that market auctions, as we saw earlier this week, traders shorting the high of the week in a front side of a move of where they've sold the high, but it's taken a creeping trend all the way back down. Still made the trade, but the difference as opposed to a blow off or a vertical move, which we'll look at some specific examples, the difference can be where a market just rips right through very explosively and the trade is over fast. Let's take a look. Now, obviously, you can trade. There'll be opportunities on any instrument sometimes in any session. But if you're looking for specific explosive opportunities, the day count will help you potentially identify explosive trades in the sessions on the pairs that will trade the best in those sessions. For example, Asian pairs may trade. It may give you some more explosive moves in the Asian session. Aussie, New Zealand, yen crosses, Aussie New Zealand crosses. Now I basically follow and look at yen crosses, specifically New Zealand and Aussie yen. New Zealand Aussie dollar, not so much, very rarely, but there are opportunities in those sessions, in the Asian session. And of course, you could look at some of the Asian indexes. I don't, but we'll look at a couple specific Asian pairs and the type of explosive moves you can get in those sessions when you understand the day count. The same thing applies for the London Euro pairs, pound, euro, Swiss franc. Obviously, we're going to see pound yen, euro yen potentially explode in those sessions as well. And obviously, the FTSE can be a good index to trade on certain days in that session for ideal best trade setups. Obviously, you can trade those instruments in every single day in those sessions, but I'm talking about explosive best trade setups based on the day count and understanding whether you're in day 1, day 2, day 3. If you're on the front side, I'm looking for an explosive move on the front side, maybe on day 2 in Asia on those yen cross pairs, specifically New Zealand Aussie yen. They may trade best. Maybe the yen will trade. Maybe the New Zealand or Aussie pair will have a best trade setup in one of, at least you need one explosive move, one great trade. One really good trade when you understand the potential of these, even for the week, is enough. But when you get them on a daily basis because you hunt and understand the day count, then you'll understand what best trade setups really are. And of course, New York, the US dollar crosses, commodities, gold, oil. Obviously, there's other instruments as well, but the indexes, S&P, NASDAQ, Dow Jones 30, those can all offer at least one perfect trade per day in those sessions. Let's take a look. First thing I want to do is just identify Monday's range. Go through all your pairs and just mark off Monday's range. This is Canadian dollar. We'll just use it as a basic example. Monday's range. They break out of Monday's range on Tuesday morning. That is our break now. Our one push, our breakout side. Now we're in a downward trending market, but we have a break of the high of the day. Obviously, there's an ideal trade opportunity on day 2 on the Canadian dollar. Now, if people understood the day count, whether they were trading in Asia, okay, we broke the previous day's high. Now, if you understand the pump and dump, we come to the screen, we have our break in structure, first hour, they pump it up, back. This pump up is your key. We're going to go through this pattern over and over and over again. I go and watch the pump and dump videos. This is the pattern. They pump it back up into the high of the day. We have trap volume. Traders may have shorted this into the open for the blow off vertically right off the bat, but they pump this up before fading back down. So the initial short trade is after they've broken out. We've put our 3 peaks in. They pump it back up into the open of the session for the short trade right off the bat in the Asian session. Now, typically people aren't going to follow the Canadian dollar, but the fact that it broke the high in a downward market on day 2, there's our false break reversal. But traders who were switched on to that could come into the London Euro session for the vertical blow off trend trade right into the open of the session, still on the front side of this move. Front side of the move, day 2 short in the Europe open. So the next thing I want to talk about, just as part of day 2 shorts, we talked about identifying the consolidations. Here is our low of the day. The US puts a low of the day in and makes a high of the day. It trades through the high of the day and continues to auction higher. This is the pump right here into the close of the day. Somebody mentioned the other day they could heard me saying in their head, the house. There's the house. They pump it up and they take out the previous day's high. Nice short scalp right at the beginning of the open of the session. They pump it back up. It collapses and breaks down into the open of the Europe-London window. You're already in a short trade when this window is opening. If you're trading Europe, this is the blow-off of the pump and dump back through the low of the day. The market eventually puts a low in, they break structure, and they front side again, front side of the move again. So trader asked today, what do you mean by front side, back side? Whatever side is trending, if your thesis is that this is a short trade, this is a possible short trade setting up, this initial scalp is the break in structure. There's our front side, now you're in the back side. Somebody's positioned themselves for the short trade or taken the short trade later in the session for the collapse back down through the low of the day. The market then begins and proceeds to pump back up. There's news on the calendar. The news breaks structure and goes vertical. Obviously, this is a trading range day. But coming back, Monday sets our high and our low. Day one, pump it up. Now we're in a trading range. Monday, Tuesday, day two, hits the low, hits the high. Day three goes back to the low of the week. Day one, pumps, breaks the low. They break the high, they break the low. We're in a trading range. Day two, outside bar. Day three, they trade back to the low of the week and give us our little W structure and a vertical pin hammer at the open of the US session after the news. This is an hourly chart. Now, a great question from a trader last night, is this day two longs? I don't know what it is until it trades. And so then when I come in for the US session, as I mentioned to this trader, this could be first green day. What I tend to look for on first green day is three peaks down for the long trade, ideally in the US session. If it's going to do that, they come back into traders who are long, and then we get an explosive move back through the high of the week. In this particular case, they've pushed higher. One push, two pushes, the high of the week is yet to be put in place. Now this could break down and push back up into the high they made today and still roll over. I don't know. They could put in a low of the day, break out in Asia, pull back and go vertical in the US, or, again, retest this with a three-peak pattern for day three. This may be the high, and it may break down tomorrow and revisit the low. This is something that, again, I don't predict. I don't make any decisions. I'll look at the chart tomorrow when I come to the screen to see whether or not there is a setup there. We talked about this in today's video. Day three, low of the week, the news candle goes vertically to the low of the week and vertically to the high of the session. And then at the end of the 15-minute bar, it pulls back into the low of the week. New 15-minute bar starts and it engulfs after the 1, 2, 3, 1 push, 2 push, 3 pushes, 15 minutes. Engulfs with a pin hammer at the low of the week for a move all the way back to the high of the day, high of the week. Day three, the news candle breaks structure on the inside. So forget everything to the left after the news or before the news. Now look at this pattern. What do you see? They've pinned the low of the week, the low of the day. There is our V bottom entry at the low of the week on day three after the news. So I keep getting this question, that one gentleman, you got all these rules, you didn't say that before. There's a news announcement. And then once the announcement's over, I'm looking to get in if there's an opportunity there. You're at the low of the week on day three. There may be an opportunity if you're looking to trade this pair. Day three, down low. Today on gold, we're on day four on the back side. The market has broken down and taken out the lows. We could potentially be in a measured move down. I don't know. But I had a short trade at the high of the session after the news. I'm trading it short after the news. The news is over. 1 minute goes by. It's over already. It's already done. It didn't explode. It didn't go vertical. The 1 minute stop on it pinned into the high of the session. The high of the day was locked in at that stage. And I had a short trade entry. This is at the end of the 15-minute candle after the news. It's already done its work. There's the break in structure. That is the dump and pump in a session trade. Day three, session trade, back up to the high of the day, high of the week. In the interest of time, I'm only going to go through a couple of pairs, but I want you to study these charts. Go back to your Mondays. We have Monday. Pink line is our separator. We have Monday. Put the M on there. You need to do your homework. We have 3 peaks, 1 push, 2 push, 3 push, and a low of the day. Does not break a high or a low. Day 2, though, gives us a long trade in the London session. On day 2, trend trade in the direction of our bias. We have a low of the week possibly in place. That's not hindsight. This has to do with what I'm looking at heading into the next day. Day 1, day 2, London long. 1 push, 2 push, news candle to the high of the week on day 2 for the short trade after the news. We had several traders who shorted this back down to the low of the day. Now, one of the things to consider is that when you have a market that auctions down slowly from a vertical move, I use the expression elevator up, escalator down. When the market goes down in a creeping trend for the bulk of the session, blows off vertically and puts in peak formations and goes into consolidation, there's a high probability that on day 2, this all becomes order flow for a move back up on day 3 to take out this creeping trend of all these shorts getting in this market, this slow moving market. They're building up order flow possibly for a vertical move on day 3. I don't know, but I know that I will be paying attention on day 3 to see the strength of that move. So again, coming back that each day that you progress in a 1 push, 2 push, 3 push, day 2, your odds of a counter trend trade increase significantly on a high of the week. Same thing with a low of the week. On day 3, you may have an opportunity that is significantly better depending on the template. You'll notice they came right back up through the short trades, but again, we had news on this particular day as well. Creeping trend up into the high of the day before, same thing, slowly breaking down after the news and then putting in a peak formation before capitulating. Now coming back to consolidations. Day 4, we did not follow through on day 3 to take out the high of the day. Where is our high and our low? Day 4. They trade up into the high, into the London Open before breaking down. Now again, front side, back side. So nobody's telling you to get in up here. But if they break down in the London equity session and somebody takes a short trade here and somebody says, well, that all looks great in hindsight, what are you looking for on day 4 if day 1, day 2, day 3, we're pushing higher and it breaks down? There's your session trade on day 4 in the London session. Where are they going? Maybe to the low of the day, the low of the week. Don't know. No news. We had news later in the session in the U.S. window. Look where they go up to on the news candle. They break out of that U.S. session low. They pin back up and they get traders shorting into the low of the day. Still for a nice, reasonable 30 to 40 pips before locking in the low, coming back inside the previous day's low. Again, an area they've respected and closing off into the close of the set, well, heading into that direction at this stage anyways. So Monday puts in peak formation lows. Day 1 breaks out. That's the first day longs are broken out of the market. 1 push, 2 push, little double top pattern, 3 push. Don't know what it's going to do. It could roll over and fail tomorrow, or it could keep pushing higher. And we, still may be in the upward cycle, but we may have an opportunity where this breaks down. Don't know. Won't know till tomorrow. When I head into my session, we could see a market that breaks down and takes out the low, or we could see this market retest the high of the day, maybe pull back, don't know, and keep going higher. No idea until I get there. But I do know this. When you understand the bias and the day count, then you can have the confidence, if this is the best pair that you identify as your trade, for a session trade today, high of the day in London, bang, straight down, 50, 75 pips. Day 4, backside of the move. Now, we'll look at a couple pairs because just to show some explosive session trades, different variations, euro-yen. So we have our Monday high and low. I know that we broke Friday's high. I know traders have... I don't even want to go there. I just want to talk about the range and the day count so you start to understand the session opportunities. We have a Tuesday that breaks Monday's high and then fails. And obviously we had high day opportunity in the London session, a market that broke down in the US for a vertical capitulation on day 2. So we have a market that's pushed up into the high of the day and broken down before we get to the US session on day 2. Now, when we zoom in on this chart, we have a news candle in the US session that blew off for 50, 75 pips. So on traders probably didn't hopefully get in before the news. They might have, I don't know. So if you're looking to buy the low, the difference obviously between a vertical move versus the creeping trend up. Now, this market blew off later in the session. Remember, day 2 that had already been to the previous day's high. It's a high probability they could trade back down to the low of the week on day 2 because they've triggered the high of the day, and we know their stops are most likely at the low of the day on other time frame traders. Just put that in the back of your cap. On any day when they trigger and fail at the high of the day, we can see a capitulation back to the low of the week. Now that's day 2. We've pushed up to the high and failed. They've gone down to the low and failed. Now that to me straight away says trading range. Trading range. High of the week, low of the week. Now they've gone down to the low of the week and they're pushing back into the low into day 3. Bear candle, 1 hour chart before the Asian window opens. They're pushing down into the low of the week. They've already hit the low of the week. They've pinned the low of the week and pulled back up and gone into the close. This is a potential signal. Day 1, day 2, there's our high and low of the week. We may be at the low of the week. This is our Tuesday trade to the low of Monday. 1 push, 2 push, 3 push. They go vertical, possibly locking in that peak formation as the low of the week. They trade back into that at the beginning of day 3. We're at the low of the week on day 3. They break down prior to the Asian window starting, and they pull back above that low, and we go back onto the front side of the move before the session begins. We're at the low of the week before the session begins. This could be a day 3 opportunity to buy low and sell high. Now, if you understand the day count and you're trading certain sessions, you're going to get one of these setups in your session if you are following the pairs. I'm not trying to trade a pair in every single New York session. I'm looking for the best setups in the sessions that I'm trading. We're at the low of the week, day 3, day 1, day 2, day 3, low of the week. If I'm at the low of the week on day 3, I'm looking for a buy. If I'm looking for a buy, what do I want to know? Is the low potentially locked in? Have they put a V bottom reversal maybe in the market? Did they trade back into the low of the week? They did. Breakout pullback before the window. First 15 minutes, false move. They pull back. Second 15-minute candle begins. Let's zoom in. What do we see? Our thesis is that the low of the day is already locked in. There's our engulfment little 2-bar reversal heading into the second 15-minute bar. Where's our target? Let's go back and look at our initial consolidation from the U.S. blow-off. There's our high of the day. There's our low of the day. They traded back down into the low of the day, locked it in, went on the front side. We can only go long. We're on the front side of the move. That's a very explosive 100-pip move, very fast on day 3. Lastly, I'm not going to go through everything, but you can do this again on your own. I'm going to talk about gold for a second, and we'll finish up and you can do your homework. We have 3 peaks down before locking in the low on Monday on gold. You'll notice they went back into Friday's breakout. No higher low of the day is broken. They pinned it at the end of the session. First glue, that's at the end of the session. They've gone up to the high at the end of the session. What does that tell you? They dragged volume down the first half of the day. They explode at the end of the session. They pump it up at the end of the session. I'm repeating that because there's our bias now. There's our bias heading into the new day. We're going up. If you're trading Asia or London, there may be an ideal trade to continue for the breakout day on day 2. There's our high and low of the week, our initial high-low, they break out. So we'll call that one push. Two pushes. We had news, we had pins at the top, they pull it back, and we go up on day 3. And you'll notice I drew this line the other day. We're still on the front side of the move. So I talked about this. I didn't feel as confident shorting into the front side of this move. We're making higher lows. Okay, we had some pins here, but they're still making higher lows. They go vertical on day 3. But into the rollover, they break down sideways and into the Asian session. So we're day 1, day 2 breaks out, day 3 breaks out, doesn't break the high, but it breaks out of the lower high, and it's again a 1, 2, 3 push pattern for breaking down and going sideways into the close, heading into day 4. Heading into day 4, sideways on day 4. Where's our consolidation? So we have our US session low, we have our last high before heading into the new day. So again, talking about this, we're on day 4. We potentially are on the backside of this move. Why? Because it's day 4 and we made lower highs into the close. Lower highs, it can still explode and go vertical. We have our consolidation, and then we have a nice little consolidation heading into our day 4. Let's zoom in and go through the thought process. We may have a high of the day locked in above 50 heading into the new day. We're on day 4. The high may be locked in. 1 push, 2 push, 3 push, breaking down. There's our consolidation. We have a low of the session. We have a pump up peak formation high in the Asian session. That's a little gift. When you see the pump up, you should be thinking pump and dump. There's our consolidation, second 15-minute bar. Third 15-minute bar opens, and at the end of that third 15-minute bar, if you weren't in already, there's our little engulfment on day 4 on the backside of this move for a very explosive, beautiful trade in the Asian session on gold. Now, this market goes down. What does that tell us on day 4? We're now potentially in a broken down market. Which means I'm looking for low-hanging fruit. We broke out of the consolidation from the U.S. session. We're below the previous day's low now. We're below the previous day's low. We're in a broken down market. Here's my front side. They go up. They hit the stops on the breakout. And what do we see? Our little M structure. So forget about everything. Just think front side. I'm not even, you have to look at a lot of things, but let's keep it simple. London opens, we're still going up higher. We get a little M pattern. It breaks the M. We are now potentially going to go into the backside. No, I don't need to sell. Traders get confused and they think, I didn't get the trade. I didn't sell it here. No. Once it goes underneath here, now I'm starting to see that I can get a trade opportunity. I don't need to sell the high. I want to sell it as it's about to accelerate and potentially blow off. It breaks down. There's our break in structure. Breaks the most recent low. And then our new hour starts and we get a 15-minute pump up. It triggers the new 15-minute high. And lo and behold, there's our little M for a nice, safe, tight short. I know there are traders, you can get a starter up here if you want to do that. Take a starter. It's a tight stop. It's okay because you're now potentially at the high of the session in London. The new hour, third hour, there's your example, right? First hour puts a high and low in place. Second hour extends the range. Breaks structure, pulls back. Third hour goes vertical. Takes out the low of the session. Heads down towards the low of the day. Now, hopefully traders will now understand why I took this short trade. The high of the day of the session may be locked in heading into my US 12 candle window. The market blows off in the first 15 minutes and then proceeds in the second 15-minute bar, pump. News candle pins into shorts, drops down, little bear pin hammer. Soon as it broke the bull candle, I was in the market. I wanted to get filled above 25. I was in, I added. I thought it was going to blow off to the low of the week. Didn't quite get there. As soon as I started seeing the push patterns. Okay, so again, two-sided trading. We're getting down to the low, 1 push, 2 push, 3 push. And this little 3-bar reversal, I closed the trade. That's all it is. It's a pump in a short trade in a broken down market on the backside on day 4. Didn't go vertical. We're already down low. Obviously, we had a great vertical move in Asia. This is the 3rd level. Still a great trade. Gave 75 pips. No stress. 1-bar stop. And again, I do not put my stop above the pin. I put it above my entry candle. As soon as it starts collapsing, initial bar is the first one. As soon as it breaks through the low, I adjust that. As it keeps falling, I'll move it tight. Once it breaks the low, I'm at break even. That quarter level down in here, I'm at break even. That little pullback, I was definitely at break even. But these pins in the middle gave me confidence that this was going to roll over and continue. I thought it would maybe poke through to the low of the week. It didn't do that. But we're in a broken down market. The high was locked into the session. They break down. We're looking for the pump on the news. There was no explosive vertical move of 100 pips. There was no whipsaw back and forth. They pinned it. They reversed, proceeded back in the direction of the original short trade. Study the day count. Understand the difference. Look at your Mondays. Understand the pushes that extend the range. And then look at the different variations of that. Master those setups. Know the sessions that you're trading and which pairs may offer an explosive trade in one of those day count moves, day 2, day 3, whatever that may be, and understand when you're on the front side versus the back side of those trades. Hopefully that helps traders. Keep it simple. Master the day count. Have a great day, and may the markets go with you.